From one retail investor to another. This is Trader72. Good afternoon. Welcome back to sunny London. It's sunny on a Monday afternoon actually here. And I hope you all had a tremendous weekend. We certainly all needed, I think, after last week's bloodbath, especially on Friday. But hopefully we're all back fresh. I've had a very chilled out one. I hope you guys have had one too. So today we are going to start the week with an analysis on our famous Uber. Now, for transparency, I've just bought into Uber late last week. And as I said, this show is really about helping people to process what I've learned. But please do your own due diligence. Please do not copy my trades. You'll probably see there's no point copying at this stage because they're all in the red. It has been a bruising week. But obviously this is a separate account that I've just started. And from a value point of view, obviously, when you're buying into a company, you're always going to be in slight distress to start off with. But please do your own due diligence, make your own research. And I'm only here kind of to advise. And I'm going to talk to you guys, very much with transparency. Simplistically, there's no need to put any big words or financial words if, like some other people may do on YouTube. I'm looking to simplify things as much as I can from somebody that's just a small retail investor that's been doing this for on and off for the last 11 years. And just going through experiences I've gone through. Some of you may have just started. Some of you may have already gone down the roads as I have, but always good to hear it from possibly somebody else. I know I like it to hear other people's point of view. So I think this is the beauty of YouTube, and especially hopefully of this specific channel. So without any further ado, let's start with Uber and where we are. We'll break this down into basically the ecosystem of the company, the fundamentals, which are obviously very important, the intrinsic and MOS or margin of safety of the actual share price, where the share price is also going, and my final thoughts really on the company in terms of a bull and bear case on each side to give it some kind of equilibrium to the stock itself. Always a good thing to have, pluses and minuses. So, the ecosystem as it stands now, we all know what Uber is about. It's mobility, delivery, freight, and advanced technology. That's the four major parts or kit apart of Uber as it stands. It has got a tremendous, obviously, revenue of 21% year on year, with gross booking and now at 165 billion. It's a staggering amount. The biggest revenue for Uber at the moment is the mobility ride, Uber X and Comfort. Obviously delivery obviously is also another big part of it, which obviously the food and grocery convenience, that's obviously growing by the day, 40% in terms of actual market share within the company. Freight at 7%. I didn't know much about that until I started looking into it actually. And of course the advanced technologies, which obviously include autonomous tech, which is aka robo taxis. That is obviously a major part. So robo taxis, just to kind of go through obviously this part of it at the moment, it is obviously a big news at the moment, and just let's catch up on some of the news that it has done in the past few months.
More driverless rides are heading to Las Vegas this summer. Zoox and Uber are partnering up. You will soon be able to reserve one of Zoox's robo-taxis directly through the Uber app. Zoox will continue to offer rides on its own platform, but the new deal is expected to roll out here in Las Vegas first, with Los Angeles joining the program next year.
So that is one of the robo-taxis. And of course, they've just done a deal with Lucid recently, which has just been unveiled at the CES in 2026, which is the latest robo-taxi look. And it does look pretty sexy, I must admit. Still not got used to having no driver in there, but it is the point of it at this rate. And obviously, to base this, obviously Lucid obviously builds the actual car, but the system itself is obviously built by Uber, which is a fantastic system, which obviously marries, as we know, customers together in terms of services, from restaurants to cab drivers to obviously, hailing cabs for customers and restaurants as well. So this is actually an important part of the actual what really Uber's about. But let's have a quick look at this latest robo-taxi. I feel like calling it RoboCup for some reason. I don't know why. Maybe that might show my age at the moment. But anyway, I was trying to endeavour not to say this, but here we go.
A new robotaxi design was unveiled at this year's Consumer Electronics Show in Las Vegas. It's the product of a partnership between Uber, EV maker Lucid, and autonomous vehicle technology firm Nuro, and it joins a growing list of US contenders from companies including Waymo and Tesla. The vehicle is built on Lucid's Gravity electric SUV. It has a roof-mounted sensor ring with cameras, LiDAR, and radar for full 360-degree coverage. Uber created the inside experience, with touchscreens that let passengers adjust the temperature, seats, and entertainment. The robotaxi uses NVIDIA's AI driving hardware and is driven by Neuro's autonomous tech, meaning it can drive itself in certain conditions without a human. On-road testing began in December, using engineering prototypes with a safety operator. David Salguero is Neuro's head of communications.
Well, I mean, I could go on about this show there. It's impressive, obviously, and obviously the NVIDIA association with Lucid and Uber shows you that these tech companies are not scared to overlap with each other and actually work together in conjunction to make those taxis. So it's quite incredible bit of software, and you can see where Uber's strengths are in terms of their side of the technology of how to move this forward in terms of cabs, or I call it cabs, robo-taxis, sorry, should I be calling them? So that is where we are at. So that is obviously part of this autonomous technology, which will grow by, I'm sure, year by year or month by month. I think it will also add a tremendous amount of margin to its profit due to the fact that they won't be using drivers going forward, if that all does happen to plan. But obviously that will make a major difference, not issue, to the gross margins. So that's where we're at. So obviously in terms of why it wins, I mean, obviously it's got a huge network. We'll come to that in a minute. But, you know, in terms of the key stats here is 171 million active users, active drivers and couriers, 8.2. It is over 70 plus countries. Uber Eats is now in 8,000 plus cities. It is growing by the day. The moat is getting bigger and bigger at this moment. Obviously, how it makes its money, it goes from gross booking to, it takes a rate, obviously a percentage of the gross booking, which obviously brings the revenue. The company, obviously, as you guys know, it's founded back in 2009 by Dara Khosrowshahi. It was a very hard word to say. I've been trying to practice this one for a while, but it hasn't worked. So apologies for absolutely murdering his name. But Dara, anyway, which is simpler to call him Dara, even so I don't know him. So that's what I just want to say that ahead. Has certainly turned the company around from a negative cash flow company to a positive cash flow for sure. So that's kind of where we are. So just to go back to, obviously, we've gone through the infrastructure of the company. Now, the revenue side is obviously also important. So at the moment, as it stands, the revenue stands at 52 billion. Net income is up to 10 billion now. Tick, obviously. Free cash flow is now up to 10.10 billion, so fairly impressive. It has, if I'm not wrong, just to kind of go back through the actual market cap, currently at 143 billion with a total enterprise of 144. So that gives it a 12 billion, obviously, in debt, which I would say would be quite substantial for any smaller companies or medium-sized companies or even sizable companies. But it has got a 10.10 billion pound cash flow, which means that it will easily pay back its debt, which is one of the key, criteria that I would look at when I look at a company. Can the company pay its debt back quickly? And it certainly does in that respect, just due to the pure amount of free cash flow there. So cash at the moment in the bank is 7.63 billion pounds. So pretty safe to assume that it will pay its debt back fairly quickly. Beta currently is at 1.22, but anyway, that will come back to that in a minute. But in terms of sales going forward, EPS going forward, again for the next 3 years, 331, 429 and 527. So very impressive EPS. That's 35, 29 and 22%. Obviously the EPS can't keep growing at such a pace. Eventually it will settle down, but I think that's very impressive EPS going forward. Price to book is 5 times 3, again very impressive. So again, that's a good amount. The fundamentals look super strong with the cash position from that point of view. Just to go quickly back in terms of how they make their money, because it's interesting how people it's kind of misstrued that, but obviously the take rate for Uber captures about 20 to 30% of gross booking. So it also has a recurring subscription revenue, which is the secret sauce, reducing customers' acquisition costs, and the shift to hybrid infrastructure. So by partnering with Rivian, which I've just mentioned in NVIDIA, which obviously is started to be active more and more. So infrastructure there, we're working with different other big tech companies is obviously key. Moving on to the analysis in terms of now the 4Ms, which is meaning, moat, management, and obviously margin of safety. With margin of safety, we'll come to that in a minute, but the three main key criteria is obviously the meaning. We understand what the business does. Anybody that invests in any company, and I do repeat this, you need to understand what the company is about, the infrastructure and how it works. That is very important before you invest. The moat obviously is clearly autonomous, as it says there. It has over 200 million now monthly users. It has a staggering moat in terms of taxis, hailing taxis, and delivery, food delivery, and obviously it has got competition. Maybe not as as clean cut as maybe Visa or MasterCard, but it is certainly a huge now play, which I think would be very hard to compete against or to move against, just due to the sheer network effect, which is a network being one customer to another of people using the actual app itself. So certainly no problem there. Tick for that one. Management, Dara's done a fantastic job turning it around, and I think that is a good management. And from a zero to or negative to $10 billion in annual free cash flow is an amazing turnaround. So well done there on that side. So moving on to now the current how we work the intrinsic price. The intrinsic price is key to any value investor, I think, and I've learned that the hard way with Adobe when I bought in too quickly. You want the true worthy share price of the company. It's like buying a house at the right price, not in an overvalued. If you buy a house that's worth £400,000 and you buy a house at 600,000 and there's a crash, you are going to losing out quite a bit and getting very badly, as opposed to buying a house at the right price, and if there's a margin of discount on that, you will not suffer the consequence of the extra losses. So it's the same similar situation. You don't, when you go and buy something like a bag or a t-shirt or a nice pair of trousers, you want to buy at a good discount. Well, I don't think you want to buy an overpriced pair of trousers unless you are super rich, maybe. But, always looking for a good discount off the price. And this is the same thing with stock pricing. It is all about the story, which is the actual base, the company and what it does, marrying that with a good, worthy, discounted share price. And that's what you want to look at for. So how do we work that one out? Well, I've done it before. I've showed you briefly before, but this is my own there that I've worked out for this time around. So you calculate the future discounted free cash flow of a company for the next 10 years. You've already got obviously the last 10 years. So this is really an expansion there of looking at where we think the discount free cash flow will be at. Now, currently we're looking at, we put all this together in a mixing pot and it comes out with an intrinsic price in a simplistic way. That's the only way I can actually explain it. So current free cash flow is currently at 10.10 billion. Now the growth rate is movable. It is subjective. It depends on how conservative you want to be, or you feel that the company is going to be, the growth of the company will certainly be quite high. You have got choice of 10, 12, 14, even 16%. My idea is to go fairly conservative so you get a fairly good value intrinsic price based on last earnings. So we know that the earnings for Uber has been and it's obviously not based on the last 10 years, which a lot of company would have. So this is only based on the last 5 years, as it was obviously negative. But we do know that obviously the earnings or the growth earnings for Uber is between 18 to 20%. So I've taken this back slightly to 12%, which I feel is reasonable. A steady kind of growth, which is what you want, especially with the AV and the rollout of the Avian with Rivian recently and the robo taxis. Discount rate, which obviously is an aggressive return, which you obviously based on the beta, which obviously is the share price, the volatility of the share price. So you want to give it a discount rate of about 8% every year, because obviously the money devalues as it goes on. So you can't just say that £1 will be exactly £1 in 10 years down the line. So you are speculating on what you think the growth will be in terms of free cash flow, but also discounting it back. That's important that you do that. Now, for tech companies, normally you're looking at 8%. You can go up to 10%. Some people who have slow growth, maybe established companies, go down as far down as 6 to 8%. But I think the discount rate for me, on average, is about 8%. Terminal multiple is very important. That's beyond the 10 years. You can only go, so you have to base it on GDP of the country at the time, GDP style growth, which is typically between 1 to 3%. So for me, I go at 3%. That's pretty much beyond the 10 years, obviously. So that's what you got to think. And obviously, how many shares are outstanding out there to various different investors? Currently at 2.6 billion, but there's reflecting obviously the massive 2025 buyback, which obviously has happened recently. You normally tend to do a buyback, for you guys who don't know, when the share price is more on the lower 52-week low side, which makes sense to buy back shares at a cheaper rate, and then take it off the market. So you mix all this together in terms of, you can do it via AI actually these days, or AI platforms, or you can do it your own calculations if you're a math genius. I'm not, so I don't tend to do it as a calculation through AI, but it's obviously double check that it is right before you do it. So it spits out an intrinsic price of $126.50 a share. Currently, it's at 69, so you can see that the upside is currently 45.3%, an outstanding amount. I do repeat this, 45% discount off its intrinsic price. That is a massive margin of safety, which would attract quite a few investors, i.e. potentially our friend Mr. Bill Ackman, which has bought obviously a tremendous amount. Now, Bill doesn't tend to, I call him Bill, I don't even know him, Mr. Ackman, sorry. I've got a thing about first names today, so I apologize to you guys. Bill Ackman bought obviously about 6 months ago around the 70 mark. I don't know whether he bought it specifically on its intrinsic price, but he certainly bought it in a very good price. I think Bill Ackman follows quite a lot in terms of system of Warren Buffett, and how he works. So predominantly he probably did work out an intrinsic price at the time. It did go up to 90 and then came back down. So but a tremendous amount of money invested, and clearly believes in the strategic value of Uber going forward, with a 2.3 billion stake in Uber. So that is definitely a super plus there from that point of view. So perhaps he's came to the same conclusion at the time when it was around 70, that it was undervalued. So this is where we are. The reverse DCF, very quickly, is what the markets would factor in terms of annual growth. So if the number is below the 12% or the 14% you guys choose in terms of growth, it means that obviously it is undervalued, because it means that from 4.8 to 12% there is growth to be done there. If the reverse DCF is above, then it would mean that it is overvalued, and it would be very, very hard to beat the current annual growth if it's at let's say 16-18%. But I think from 4.8 to 12% is pretty reasonable, and gives it, as it says, a significant mispricing. So moving on, so that's why I would say. So moving on very swiftly now to the next step, which is the situation with the bull versus the bear case, guys. Now, there's obviously always two sides to the coin, to a coin even, should I say. Uber bull case, let's briefly go for it. Obviously, the intrinsic price we've just gone through, around 126. You could push it up to 149 if you go at 14 to 16% growth. That's something that definitely Uber could probably reach. Again, as I mentioned, I was quite conservative. Cash flow is fantastic. Network mode we've gone through. Capital allocation, great. Future growth, obviously with ads. Uber One potential robotaxi integration is going to blow up, I think, even more the revenue and potentially the profit margins going forward. And it is currently well, I mean, it is probably not, this is pretty much up to date, but pretty much at a P ratio of 22. I think the last I looked, it was actually even lower than that, because it's at $69 a share at the moment. So really cheap in terms of potential, P, projection, P ratio, future earnings, compared to its peers or its sector, I think at 34. So fact check me on that one, but I'm pretty sure it's around that. So definitely, again, proving the point that the share price is fairly cheap, and obviously there's all these criteria that you can use to actually really get a confirmation of that through the intrinsic price, the P ratio, the PEG as well, which is another one you guys should look at. And let me know if you guys want me to do a bit of a show on this in terms of explanation on some of these matrix. Bear case, robotaxi disruption, margin squeeze. I can't, at the moment, I feel that's maybe a little bit exaggerated because obviously of what's going on with potential margins going up in terms of robotaxis. But obviously, moat and competition can always happen. Which shows that regulatory risk is possibly the biggest issue there. I do believe that there is an Uber sexual assault lawsuit going on at the moment. It's just obviously somebody won a court case for $8.5 million, and there's another further 3,700 in the waiting from 30 various different states. So again, that could also be an issue going forward. There's plenty of other litigations going on with various different cities and employment laws from various different countries for drivers. So maybe worth having a look into that, guys, in terms of negativity from that point of view. So insurance costs as well, potential can spike up. Obviously, that would also be the other thing from accidents, which obviously is always there. And I think there's a CFO transition going on at the moment as well, which could have affected the share price. So that would be probably why the share price has stagnated. Because some of you may well just go, well, yes, Nick, all great to have a cheap stock, but it has been in its 70s for the last 6 months and hasn't really moved from back up to north of 80. And that would be probably one of the reasons, healthy competition for robo-taxis, obviously, margin squeeze potentially, and also specifically regulatory risks are litigations ongoing that always throw the share price back. So that's something to definitely to look at. In terms of, the bottom line on this is that the price could drop to 55.60. We know that that's always a possibility to maybe, more possibility for especially for value investors to buy on the dip further. So that's kind of the takeaway. So the takeaway for me in all this really is, based on all this really, is that let's be honest, we can tick it off. We can tick that the business is a huge business. It has various different wings or department, businesses which are very successful and growing. It has a fantastic fundamentals tick in terms of margins, free cash flow, revenues on the up. So that's another tick there. Fantastic investors behind it, like Bill Ackman, who truly believe in the stock and have put billions of dollars into it, and also financial institution obviously buying into it, and actually recently more hedge funds buying into it. So that has a P ratio is cheap. The intrinsic price is cheap. So and obviously the future growth of the company is going to, I think, go, even higher in terms of robo-taxis, what they develop there. I think it's only a matter of time before we've got them rolled out in major European cities and North American cities and the world potentially. And if Uber can redirect their customers via their app, it would cut out the drivers and increase its bottom line by twofolds, I would have thought. So, with AI and the future as well, I think Uber are in a fantastic position there for sure. Let's have a quick look at the share price and the chart at the moment. We know that it's sitting currently just above its 200-day moving average. There it is there, guys, just to give you a quick idea. Currently at $70 a share, but it was at 69, so it's flirting on around 60. About 65 is probably the 200-day moving average. It's in oversold territory, so it has struggled for the last few months, as you can see on the momentum, the Stoich, and in terms of MACD, it hasn't been in buying since really November last year. So it is going through a tough time at the moment. As such, all tech stocks have gone, and also the geopolitical situation. So I would say that, again, a wonderful opportunity to potentially an entry point at some stage. I would obviously do your own diligence, your own research. I would suggest that even if it fell back to 68 to 65, it could be even a bigger amount of discount on its price, on its true price. I've bought myself, as you will see, at 72. So let's have a quick look at my portfolio. Yes, 72 there, 72.27 was my first tranche, and I will buy more if it falls back towards more 60, maybe 66, 67. I was on the verge of doing that on Friday, actually, very quickly, but it has bounced back slightly. As you can see, they're slightly in the red. So that is Uber, guys. I've gone with my convictions. Let me know what your thoughts are in terms of whether this is a buy or a hold, maybe, or a wait, even. I would certainly suggest that between 65 and 70 is an ideal spot there to start. Please, maybe if you do go ahead, buy a small amount to start off with. That's what I tend to do. Never buy a tremendous amount straight away. I would certainly will tip my toes into the water slowly, see if it's warm, and then, you know, put more in if you think it's fallen back further. So that's what I think we, should do. But like I said, do your own diligence, please, guys, because like I said, I'm not a financial advisor. And let me know what you think below in the comments. Finish this off very quickly. State of the markets. Friday was a bloody day and an awful day. We have got today a green day across the board, guys. It's quite nice, but we are in a very erratic market. The VIX is very high, so you are going to get days when it's up and it's back down. It looks like the news from the Middle East conflict has been fairly quiet. Trump is saying that we're very near potential peace talks. Who is he talking to? Question mark there on that one. We don't know. Nobody really knows. Iranians obviously refusing or to accept, at least in public, that they are negotiating anything. So it is a bit of a stalemate at the moment, guys, really, in that respect. So we'll soon find out, I'm sure, the news. But currently the crude oil is up to $111 a barrel, which is quite nasty, really. As you guys know, I've got a short position in oil at the moment. I thought it would come back down by now, but I've been slightly mistaken. So I am holding the bag at $92 a share. So I'm quite way off. I'm even thinking that potentially if it goes up more, I would buy, because price of oil will eventually come down. And I think there will be eventually some kind of peace talks, whether the Iranians can withhold any further war. I don't know. The Americans are certainly gathering the army in the Middle East, around the coast there. So who knows what will happen. Any news, obviously, will keep in touch and go forward. But yeah, so that's where we're at the moment. Certainly my portfolio has taken a slight smile of happiness today. So a little bit back in play a bit. But still, Visa was at 295 on Friday. But it now looks like it's back at 300. S&P Global has certainly moved up nicely today. So that is a massive plus for me, because it was down to 410. So yeah, looking a little bit more smiley, but I know from experience that this is just maybe a respite. So we'll see. I can do another show at some stage about my portfolio and where I'm at. As I said, this is a small portfolio I've just started for this channel. So it's clearly all in the red at the moment. But I have just bought into all these companies recently. So if you're going to be a value investor, that's what will happen. You're not buying into companies that are not in distress. They are in distress. I will do a further upload at some stage, just based on other bargains out there. We have got plenty at the moment, especially the tech companies are starting to get very, very juicy in terms of discount. So maybe that for another show. But certainly that's where I'm at the moment. So from one retail investor to another, I hope you enjoyed. This is Trader 72. Please do leave comments below if you any question, or if you whether or not this was useful or not, maybe. I suppose this is a big question mark whether you guys may agree with me or not. Please subscribe and like. Super important to me as a very young, well, not me young, but young channel. Or every subscriber, even view, is important for this at this stage for me to keep going. But I'm thoroughly enjoying it at the moment. It gives me some kind of cathartic feeling that I can just do this for me and to recap on things, and if it pleases other people and helps other people, then all the better. Overnight, guys, I can't even speak. Be a long one. Speak to you soon. Take care. Have a good week.